Hey traders, Raghee here, and in this recap video I'm going to walk you through a couple things that are really key to trading certain types of setups, and one of them is the idea of what we call a fade, or taking advantage of an overbought market. And I'm going to walk you through a market right now, show you how long it takes sometimes for these markets to roll over, what kind of strategies you can use, and then also when you're looking at a setup, that where when you started the setup to when the trigger happened, or even after you deployed the trade, if the environment changes, what are some of the alternatives that you have? So I know I threw a lot out there, but let's get to it. So first of all, this is the 30-year, the long bond, and this is the September contract. So first of all, when it comes to contract rolls, I think one of the most famous, probably one of the most impactful contract rolls are the bonds. So number one, when you're playing bonds specifically, keep an eye on when we roll from June to September, September to December, because the differential between the front month, the previous front month, and the soon-to-be front month can create some fairly significant gaps. And you want to keep an eye on when those gaps may occur, approximately 1 to 2 weeks from last trading day. All right, that's number one, specific to this market. Number two, this is a market that we know is very sensitive to the FOMC, very sensitive to the balance sheet unwind, and I think very sensitive to interest rates in other countries. And I think we have a number of major central banks, like the Bank of England and the European Central Bank, that are looking to turn the corner and become much more hawkish. That's going to put some pressure, downward pressure on the bonds, because that foreign money is not necessarily going to have to find a home in U.S. Treasuries. That's another kind of big picture macro. Let's talk about the technicals here. This market was one that I have in the past shorted a number of times, taking advantage of resistance that had been occurring at Darvis defined levels. What do I mean by that? We're using Darvis to identify where the ceiling in this market is, but the easy thing was back in here and back in here, the market was working in a choppy range, So when you look at choppy ranges like this, the overbought, oversold, back and forth, the thing to remember is when there's no dots and there's no consistency of green grab candles, identifying where the resistance is with a Darvis and shorting that via, say, TLT, or via the 30-year futures, or even put options is pretty basic. But what we started to get here, we started wandering up into this area, and the day that we entered that 146 zone, we actually broke it. We actually broke through it and made a higher high. That got my attention, but I still put a position on. The position that I put on until I knew the market made a higher high, because we didn't know that was going to happen, is I shorted the September contract. So then we move forward, and then all of a sudden, within about 7 days, I've got 5 propulsion dots. So here's what I want you to think about when a market looks like it might be turning into an uptrend, even though you're pretty certain a resistance ceiling can hold. Transition into a safer, risk-limited position using put options in TLT or put options in the 30-year. You can also put what I call a strip straddle, which is a modified long straddle with a bearish directional bias. And that simply means that you buy at the money puts and at the money calls in a 2-to-1 ratio. So for every 2 at the money puts, you buy 1 at the money call. And what that does is it sort of puts a sort of safety net on the other side of your position. Now, let's talk about patience here. Patience is what? Look how long it took this market to finally head down. And this is where a lot of traders say things like, I'm bored with this trade, or things of that nature, which I never understood, because the only litmus test should be, is the trade still valid or not? Are we continuing to hammer away at 146 and punch up to higher highs subsequent to the one we had here? No. Is the market moving sideways? Yes. Did the propulsion dots stop? Yes. And it's very interesting. No sooner did these dots stop, which was a cause for concern for me, but we got a blue grab candle. not a higher high. And then finally, Friday and Monday, we are getting the sell-off that we've been waiting for some time, for well over, almost 2 weeks at this point. We're getting the move through 145, and we're getting the move through 144. And heck, we might be at 143, and this is a tremendous day for this position. This is one we've talked about for weeks, and it might take some time for us to find the trade, get the trigger, get the follow-through, and really today, getting this acceleration. So think about, where is your trade valid? Where is it not? And do you have the patience, and are you getting the signs that you need to see in order to get and stay confident about the trade that you've built? All right, I'll see you in the next update.